Welcome, everyone. Good morning, good evening, good afternoon, wherever you are. Welcome to this third installment of ACME's latest webinar series focused on what to expect around Article 6 as we go into this very important COP in Baku. My name is Oliver Glanville. I'm head of programs at ACME based in Nairobi. It's a pleasure to sort of help host this discussion today. Before we go into any opening remarks and introduction to the panelists, if we go to the next slide, Chloe, just a bit of housekeeping. So just in terms of the format of this session, we're obviously kicking off now with some opening remarks. We'll then dive into a panel discussion where we'll hear from those really close to these market developments and thinking about the implications of what might happen at COP29 with regards to Article 6 and future developments in the market. And then, similar to last time, we've responded to some of the feedback from the audience, giving quite a lot of time for a sort of Q&A session. So we will, we appreciate those, interested to make a question to input that into the chat box, and we'll, bring forward those or either answer them in the chat. Those that merit further discussion, we'll put to our panelists after they've had their panel discussion hosted by Paul. And then we'll wrap up on the hour. Hopefully this is going to be a really interesting and useful discussion to all those relevant stakeholders in the market. Now, I guess as we sort of go into this panel, some brief opening remarks. If I wind back a year or so ago, there was a lot of hope going into COP28 of what might happen at COP with regards to Article 6. Concerns around the voluntary market, which has been so buoyant in the last 2 years previously, concerns around integrity, transparency, and indeed from where the demand will come from, have really haunted the VCM. And there was a lot of interest, and I guess hope as towards the confirmation around Article 6 as to where this market will go. And now, for various reasons, a number of them, I would suggest, very political, we did not have such clarity delivered with regards to Article 6.2, indeed particularly though, Article 6.4. We have seen in the last year or so though, despite having fragmented rules of the road around 6.2, further progress in that regard with a number of different MOUs, deals, and actual transactions of corresponding adjusted credits. And indeed, one of our panelists, Parimal, is actually in Bonn now, assessing 6 countries who have submitted their progress reports around Article 6.2. So we've seen some progress in that light. However, a lot of hope comes onto Article 6.4, the sort of centralized compliance scheme, which we see a lot of merging, if you like, with the VCM going forwards. So I think there's a lot of hope, as I said, again going into this round of negotiations. We've seen on Article 6.4 as well, recent progress in the last month or weeks even. The Article 6.4 supervisory body has made an unprecedented move to approve its own recommendations around methodologies around removals and further procedures. So perhaps that hope is for progress under that area, and hope going into Article 6 negotiations it is justified. So without further ado anyway, I'll hand over to those much closer to the market or indeed involved in some of these negotiations. I'm delighted to introduce onto our panel, Paul Mathara, ACME's sort of CEO, who'll be moderating this discussion. Audrey Goldstein, who's Director of Carbon Markets Development at one of our very close partners, Standard Chartered. Sebastian Cross, Co-founder and Chief Innovation Officer at V0, providing a critical role as a ratings organization, bringing that critical transparency and trust back into the market. And Parimal Arumugam, Manager of Intergovernmental Negotiations and Stakeholder Interactions within the Mitigation Division of the UNFCCC. Thank you again all for joining the session. We appreciate it. It must be a very, very busy time going into COP. and Nadeep Rumal at Bonn at the moment. So we appreciate the time you've taken for this discussion. Without further ado, hand over to Paul. Thank you.
Thank you so very much, Oliver, for that intro and just context setting, and really just to very strongly echo the appreciation to Audrey, Sebastian, and Parimal for creating time at this moment, because as we really fire up energies around getting everyone to Baku, there are a lot of open questions as to what exactly will come out and what should be realistic expectations. So with that, Parimal, unfortunately, I have to start with you, just giving a bit of context for in terms of, we have so much talk about UNFCCC, but what exactly is, what's the role of UNFCCC in facilitating the operationalization of the Article 6 space? Please, welcome, Parimal.
Yeah, thank you. Thanks, Paul, and thanks for inviting UNFCCC. No, I think I would start with two things. I think Olivier started by saying unprecedented outcome by the supervisory body in Baku. Probably that's where the sentiment is starting from. So we are happy to be in Baku a month before COP and make some historical decisions around the standards, both on methodological standards and removals. So I would say from an Article 6 operationalization perspective, what role does UNFCCC plays? I would say that we have fundamentally two roles. One, as you know, that there are two market instruments. I'm not talking about, I'm sure that I have seen that about 76 plus people are on the call, and I hope that not my non-market-based approach friends are there, so I don't want them to get offended. So Article 6, when we say Article 6, it includes two market instruments and one non-market-based instrument. So I would, like based on the scope and content of the conversation, I limit myself to the markets bit. So 6.2 and 6.4, Article 6.2 is about transparency and accountability system, where countries can bilaterally cooperate amongst themselves, setting up their own established standards, while meeting the guidance adopted by the parties to the Paris Agreement that they have agreed in Glasgow and subsequent guidances in Sharm el-Sheikh, etc. So there I would say that the role of the UNFCCC is more about ensuring transparency, accountability, and environmental integrity of such transactions. So we do not oversee or govern them, but we facilitate the process of ensuring the reports. So it's an obligation for any country that engage in a cooperative approach for an transfer of mitigation outcomes, meaning if a carbon unit is being traded across the jurisdiction, and if another country wanted to use it for its NDC, or airline industry wanted to use it for their CORSIA compliance, etc., they have a reporting obligation under the UNFCCC. So those reports have to be submitted, and we run the process of negotiating the relevant reporting requirements. And we have the forms and necessary instruments to submit those reports. This week is again a key milestone for Article 6 implementation. We are currently reviewing, the technical expert reviewers are reviewing 6 cooperative approaches between Switzerland and Ghana, Switzerland and Thailand, Switzerland and Vanuatu, Guyana, and Suriname. So these are the 5 cooperative approaches, but including Switzerland, it's 6. So the reviewers are working in terms of looking at how their cooperation is aligned to the rules that were established in Glasgow. So that provides the market with the necessary transparency in terms of saying that how these cooperative approaches are aligned to the requirements. And then in terms of accountability and also in terms of accounting, it's not an immediate task, but when the countries have started making their trading that happens, we also manage an infrastructure of the database, and that's where all the transactions are recorded. The countries have an obligation to provide like a calendar year transactions in the subsequent year by 15th of April. So we do a consistency check of such transactions, and we prepare a consistency report. And the 2 reports, one from the review that comes from now, and the report from the consistency through the database, is then used by the BTR review to see that how countries are in the progress towards achievement of their NDC. So from a 6.2 perspective, we basically facilitate transparency and accountability. And our role reverses when it comes to the centralized mechanism of Article 6.4. There we become a regulator of the global carbon markets, primarily because under the Paris Article 6.4 is established to be run by a supervisory body, which has representation from the 5 UN regional groups and members from LDCs and SIDS. So they are the supervisory body members. They, with the support of the Secretariat, develop standards, processes, etc., for private sector actors to develop activities in their countries, like mitigation activities, and also know that, like within ACME's context, one of the revolutionary things in Article 6 that was adopted in Glasgow is also to trade carbon units from mitigation co-benefits arising from adaptation action, as well as economic diversification plans can be an eligible activity. That's something that's not very familiar with the carbon families so far, but it has opened an opportunity. So we would be developing standards that will be used by project developers if they wanted to register them as Article 6.4 activities. And the beauty of Article 6.4 is that unlike Article 6.2, where when you cooperate with 2 countries, your trading is limited to those 2 countries. Whereas when it is Article 6.4, I as a private sector, when I interact with Article 6.4, I'm interacting with the mechanism itself. So thereby it provides an opportunity for the countries to interact without having a bilateral cooperation within another country. The scope of trading expands. Then also because of the governance that it is being established under the Paris and with parties are representing and overseeing, it has a strong, robust governance system. So we as a Secretariat
I'm sorry, because of time, I'll have to push you just a bit. Thank you for all the context. I'll have to pitch you a little bit to close out. Thanks.
Yeah, so I would say that from a 6.4 perspective, we would be functioning as a role of the regulator in terms of making sure that the carbon markets are developed out of concept of supplementarity, integrity, fungibility, and transparency. And that's our fundamental role on 6.4.
Now, thank you so much for that, Parimal. I think it was an unfairly broad question in this nature. So thank you for just trying to take some time to unpack the layers of the reality that sits behind that. But as we talk about really the rolling out of the rules of the game, I think especially in the back of a lot of the press we've seen in 23 and 24, everything has been about really concerns and anxiety about potential greenwashing and really undermining genuine climate action. So I'd like to just hand over to you, Sebastian, if you give us a bit of context on, so what can the global community really do to take steps to ensure this is not about greenwashing and inadequate action? Welcome, Sebastian.
Absolutely, thank you, Paul, and thank you to ACME for having me, and great to join my fellow panelists. So, for those of you who don't know, as B0, we are a carbon rating agency. What does that mean? We rate carbon credits to look at the likelihood that they achieve a ton of carbon. The issue the carbon market has is that every single credit is labeled as a ton of carbon, and yet underlying that are a number of assumptions, calculations, estimations that mean that there's uncertainty and risk. And if people don't understand that risk, then they find it hard to make informed decisions in the market. Article 6 is no different. All of the credits that we're looking at are basically issued from underlying activities that are looking to reduce or remove carbon. A methodology, you can kind of think of it like a recipe. It's a way that you can follow a certain activity type in order to be accredited, but there are different ways to follow methodologies that lead to different outcomes. And so ratings are the tool that enable people to understand that range of outcomes and enable them to understand it on a live and ongoing basis. And most importantly, we're completely independent. And so we're not linked to either side of a transaction. We can be a completely independent risk metric for the market. that helps people understand the risks that they're taking by engaging with the market. So to your question on specifically what can the global community do, I think that Paramal has done a fantastic job in outlining the role that the UNFCCC is playing in creating the framework for this market. And central to that is the reporting of what is actually happening here. And it's crucial that that reporting is available and transparent and gives us sufficient information to understand what projects are doing, because it enables tools like ratings to come into this market and provide that risk metric that helps rebuild trust. Some of the issues that we've seen in carbon markets historically have been driven by the fact that every credit is labeled as a ton of carbon, and it implies that there are no risks to that ton of carbon. And if people buy something that they think has no risks and then find out that there are risks, it leads to a crisis of confidence, which we've seen a number of times historically. So, we're very actively engaged, with a number of stakeholders across Article 6. I think that there's a lot of positive momentum here, both in terms of the negotiations themselves and what people are looking to achieve, but also at a country level, the focus being put by supply side countries, particularly in Africa, on building the right regulatory regimes to enable them to deliver credits into this market. Likewise, on the buyer side, to try and see the role that credits can play within a broader net zero strategy in helping countries achieve robust and ambitious NDCs. So we're very excited about the role that we can play in helping them to achieve that. I just hope that as the negotiations progress, that we can, I guess, finalize some of these guardrails and some of these frameworks that just enable the market to actually take off and market participants to kind of pick up the mantle.
Thanks so much for that, Sebastian. Maybe just a small, really further elaboration on that, especially that point you're making on the evolution we're seeing. What do you really foresee? How do you see it evolving in the concept of COP29? And what I like the point you're making about really making sure we're clear on how the rules of the game actually exist and how therefore they should be applied. It'd be great to just understand really what updates and resolutions do you see coming through in that context?
Yeah, absolutely. So I think, as far as we see it, and the feedback that we get from our clients, there's really 4 issues at stake that people are focused on. How do I think about the issuance of credits into this market? How do I think about the reporting of those credits, the management of those credits, and indeed the potential revocation of those credits? What does Article 6 introduce to carbon markets? It's obviously this country level dynamic whereby they have to be accounted for by both the seller and the buyer country. The seller has to explicitly authorize them to be exported, not to be, not be counted in the core part of NDC, and the buyer therefore, is purchasing them and saying that they count towards my target and not yours. In order to have the confidence to transact and arguably more importantly at this time invest, which I'm sure Audrey will come on to talk about. People have to have clarity on, how do I bring credits to this market? So obviously LOAs, the structure that they take, the information that's reported, the legal backing behind them is really, really important. The reporting of them, obviously a key debate here is centralized versus national registries and the role that registries play, whether it's reporting or transactional as well. And the ongoing management of credits, obviously we've seen risk buffers kind of be brought into discussion in 6.4 and the role that they can play in managing potential reversals and risk there. There's also the inclusion of insurance happening through CORSIA in 6.2. So the mechanisms that are there to ensure that projects are managed appropriately on an ongoing basis. And then that revocation question is a key one. How do revocations happen in this market? The country is going to revoke that authorization for the carbon to be exported. What does that look like? What certainty do investors have that they can understand the process there so that they can build up the confidence to invest in projects? Those are, to my mind, are the key topics on the table at COP. How they play out, I will leave to people far closer to conversations than me. But that's a summary of feedback from our broad range of clients across the market.
No, thank you so much for that context setting, Sebastian, and really just the way you've elaborated on the points that Permo put out. And now really I have to turn to Audrey and ask, so how can companies and project developers be effectively positioning themselves to leverage the opportunities that have been highlighted and from your perspective? Thanks.
Thank you very much. I don't think there is a single and clear answer to this, right? Everybody, or at least on the supply side, all the developers are asking themselves, how do I make sure my project is supported, is the one investors speak? There is, I guess, fundamentally at this stage, a concern around demand, right? I think the number one thing we need to sort out right now is not how do we get more supply, but it is how do we ensure that demand does materialize. And I mean, Sebastian had very good points on we need to give confidence, but beyond that, we also need to, I guess, in some sort, it's not necessarily having more regulation, but we need to have a more common understanding of what is quality, what is acceptable, not acceptable, what can one do, right? And we are, I think, in that consolidation phase where a lot of this is materializing, is consolidating, right? We do see we have the rating agencies that are building slowly. It can't happen in a year that all projects will be fully viewed and perceived in the same way by everyone. But beyond that, you have ICVCM that has come through and started to establish some principles as well. We do have now hopefully 6.4 that will also start developing and developing methodologies and give a clearer picture of what qualifies, what doesn't, where is that that pass or that acceptable quality threshold, right? But beyond that, you do also need to have that signal from governments on what it is that they are supporting. And Article 6 in that is a superb opportunity, right? Because in working towards Article 6, whether it is COSIA and that goes a bit more through ICAO, whether it is purely bilateral 6.2, you are building at a country level a framework with carbon laws, with in some way a bit of a white list of those are the activities, the type of projects that we are supporting trading of. And here are the particular rules and thresholds that should be abided by. And that is at this stage, I think really what needs to come to fruition to get to a point where the suppliers know exactly by which rules they have to play, what is exactly the benchmark that is they need to seek, but also buyers get a clear signal that the government is supportive of this, that these are the activities they can look at, the projects they can look into. And this is when companies like Standard Chartered can then come and help intermediate, provide liquidity on the trading side, but also financing for those activities, right? It is extremely difficult to finance a project when it is very unclear what the legal framework is around that, what is the legal status of those units, but also is this project still going to be there? Like if it's a 5-10 year financing, will this project still exist, or will there be potentially intervention from the government to say that those units are not acceptable, that they should have, the project should have registered under this or that authority? This needs to materialize, and this is really what we're looking for in trying to engage with developers in lining up off-takers financing for their projects.
Thank you so much for that context. Audrey, I think the number of times you've uttered the importance of signals from all sides of the ecosystem is absolutely critical. but maybe you can just elaborate on where those signals do come forth. Could you really clarify what role do you see StanChart and other financial market institutions playing, really supporting the financial mechanisms that need to evolve? Welcome.
Absolutely, thank you. I mean, I'll start by the signal question, and then how can we support, right? I think the signal, and the easiest way to explain it is maybe with an example. When you look at countries such as Singapore, for instance, with their carbon tax, are sending quite a clear signal that not only do they want to play in Article 6 markets, but they also want the private sector to have a role into this, and they're facilitating it. They're stating an exact list of those other projects that we want you to purchase. That is a very clear signal for corporates to start buying, and it provides a clear incentive, right? You do have other forms of signals. You have the US coming in a much softer way. This is not a tax or compliance requirement, but here is our view on VCM markets, and we support ICVCM as a quality threshold. This is also a softer one, but it is a signal of, if you have a credit that is CCP, we do feel you should be comfortable investing in that project, right? And then when you start looking just at 6.2, Switzerland and Ghana, or Switzerland and Thailand, right? Perumal mentioned they are currently reviewing how the whole process is going and all. Again, this is another signal that is being sent. For institutions like Standard Chartered, these become much more bankable projects. You have governments that are basically not just saying we will be the off-taker, but we are also both considering this project to be of a good quality, to be crucial to our realizing our NDC. That is a very clear signal. And this takes me to, how do we play a role? Standard Chartered is, and I think for most of those in the African continent, or they would know us, we are an emerging markets bank. These are, whether it's Africa, Southeast Asia, Middle East, these are our footprint markets. We are a bank that lends balance sheet. This is just our daily business, is about extending financing, helping to develop activity there. And carbon markets are no exception. We do feel very strongly that while those are the markets most impacted by climate change, they are also the ones that have the most opportunities to decarbonize, to develop adaptation solutions, and all those that are basically creating carbon assets for this region. There is fundamentally a funding gap in implementing a project, and before you can actually sell the credits and monetize the credits and generate revenue. While historically we have seen a lot of projects being funded through prepayments, it is not necessarily the best way to scale. We are also seeing appetite to prepay getting smaller and smaller. And that is a very clear case where a bank like us can intervene. We are here to support development of such activities. And if we feel the right signal, the right regulatory framework, legal framework is there is an off-taker, then there is a strong case for us to come and help finance those activities.
Thank you so very much, and so clear, Audrey, and just the context and realities in the space we're all working within. But now, Perumal, I have to come back to you, especially with all this talk of signals, directions, and evolutions. Could you maybe elaborate what do you see UNFCCC really doing to foster greater collaboration and coordination across sectors in the way that the Article 6 space is being rolled out? Thank you.
Yeah, thanks, Paul. I think like in terms of the greater ecosystem that we are been working on, and I think in the greater collaboration area, I think one thing is in terms of providing the necessary support to countries. I think the capacity building efforts, like UNFCCC is not alone in this, and there are multiple actors that are working in different regions. So we are working with particularly like Article 6 implementation partnership, other UN entities, and also on certain areas like even within with ACME on quite a number of things in terms of training the auditors who can undertake accreditation processes and where we can provide those knowledge support. And I think the systems are evolving, like the carbon market space that existed in the pre-Paris world is changing. So I think one of the areas of greater collaboration, I believe, is establishment of greater collaboration in terms of establishing this capacity building, because unlike in any other things, like we would have a famous saying in India, like one drop of poison can completely spoil the food. The similar way in carbon markets, once you lose the credibility or once you have a mistrust that is being formed, we are seeing in the market that it's quite difficult to bring it back. And that's where I think agencies like where Sebastian comes from and others who do those independent services on ensuring and providing that additional service to the market in terms of looking at how the different quality parameters are being addressed to keep a kind of a check. I think that collaboration with those kind of agencies is also quite crucial. The third, I would say in terms of the investment community, and I think like I could see some of my friends from other initiatives are also there in the call who are looking at from the demand side. And I think Audrey picked up that oftentimes that carbon markets is like we beat the dead snake of quality on supply. It's one thing which always get pushed to the corner, and people do many efforts to ensure that the supply is there. But there are efforts that is needed within the collaboration within UNFCCC is also working with agencies that are working on streamlining the demand beyond the government actors. Because I think it's one of the things that's crucial for this ecosystem to survive is that it's not just the compliance market, and I think there's a role for voluntary markets to play as well. And then even within the voluntary markets, and I think the UNFCCC, I think Audrey talked about the standards that would be developed, because there's also an asset class category within the Article 6.4, which are called as the mitigation contribution units, which will be used for climate finance, domestic compliance, and other voluntary purposes. So UNFCCC is also having this conversation with other voluntary standard makers and others to see that how coherent this is. And I know as a UN, as a fraternity, that sometimes we look quite different when you talk in terms of UNDP, UNEPS, the UN RED, UNFCCC, etc. So there are also steps taken by, including for SC for All. And I think the UNSG is creating a task force to look at the complementarity between the different work streams that is being done both inside the UN system and outside of the UN system, to see that how we can make sure that the necessary confidence is provided to the markets in order for them to respond to the needs where the market could grow and meet the ultimate objective. In the end, we are all talking about addressing the climate objective of 1.5 degree goal and higher ambition. So how does this market provides that? So I would say that in the greater collaboration area, I would say capacity building, standards development, working with partners and other agencies working on the voluntary space, then a common messaging and coherence in terms of coordination of efforts within the UN fraternity and outside of the UN fraternity, I would say, is something that we should look at.
No, that's absolutely spot on, Paramount. Thank you for that. If you just allow me to just ask you to go a bit deeper, especially in the context of really the recent release of standards in the removal space. What do you think, especially from Africa's perspective, where there's a lot of expectation of adaptation, what do you see around the evolution of the avoidance methodologies, really to fire up the opportunities that Africa can build in the adaptation space?
Yeah, I think like oftentimes that first and foremost that in the carbon market world or even IPCC has not defined what's avoidance is actually like from a purely technical perspective of with an experience of working in carbon markets for 2 decades, I would see that many of the activities that we call ourselves as avoidance are necessarily emission reduction activities. They do not necessarily mean an avoidance activity. Because within the UNFCCC context, in the conversations that in the negotiation rooms of avoidance is about you preserving certain types of resources without delivering a necessary service. It looks very technically complex, but it's basically to say that you do not provide a service to meet a particular service demand. By avoiding something being produced is not what is being credited. And that's the avoidance concept that has happened. Even in the Kyoto world, we call avoidance of methane emissions from landfill sites. It was loosely used, but it's about reduction of methane emissions that goes into the atmosphere. So I would not categorize them because the eligibility of Article 6.4 is about both reductions and removals. So any ton that is being reduced and any ton that is being removed, as long as they fit within the scheme of the adopted rules, they are eligible to be registered. And whether or not, I know that the publicity for removal standards has gained momentum, but if you look at the first scope and applicability of the removal standard says that this tool, this standard needs to be applied in addition to the methodological guidance that is adopted. And that's where it talks about how does the activities undertaken in mitigation aligns to the NDC, long-term strategies, temperature goals, how regulatory additionality is being established, how do you define eligibility of the activities. As I initially said, Paul, like I think one of the areas like we traditionally within the carbon markets are very much used to work with traditional and typical mitigation activities. Like be it in terms of providing energy services, rural electrification, you can also contextualize them from for future energy security reasons or adapting to climate change, etc. But there are many adaptation plans. They do also have, like, for example, when we are fastly moving towards urbanization, one area that I'm looking at in the standards development is faster pace in which that the urbanization is happening in terms of the built environment, the waste handling, energy services, transportation together, put together in terms of to adapt to the climate change, while also having benefits of climate mitigation is one area that I look into the standards development within the UNFCCC's context to really help beyond the traditional mitigation services as energy security, good drinking water supply, clean cooking. And then I would also say that the urbanization of our global south, with expected move of close to 65% to 70% of the population to live in urban context by 2035, I think those are the areas I think which largely benefits the not only African countries, but I would say the global south in general. And the ecosystem that you asked before, where the alignment and the cooperation and the collaboration happen, is to also to explore new areas in which the carbon market can penetrate. Because if we continue to remain within the traditional way of carbon markets, we will be criticized of, which goes back to your initial question to Sebastian on greenwashing, etc., where people would say that anything that needs to be done through business as usual should be left to the countries to deal with, and anything that's over and beyond what is business as usual that could be done is where the carbon markets has to help. And the areas that I have elaborated are some of the things that we should focus on, including us, because we always go behind the low-hanging fruits. But the future in terms of Africa and our continent, African continent and the global south in general, is to look at opportunities beyond the traditional means of mitigation.
No, thank you so much, Parama, for just always reminding us just how complicated and multi-layered this space is. So we need to be very careful about oversimplifying direction adoption and direction setting. So I'd ask, just so we can manage time, because there's so much vibrant questions coming in from the floor. I'd just like to ask Oliver to put out the first question, which I believe is going to Audrey. Then we go from there. Thank you.
Thanks, thanks, Paul. Yeah, so a question coming in for Audrey, and then one to Sebastian afterwards. So first of all, to Audrey, yeah, how does Standard Chartered assess risk in nature-based projects in Africa? And does Article 6.2 or 6.4 help in assessing those risks?
Thank you. It's an interesting question. So for nature, as much as any other opportunities or activities that we would review, we have, I guess, a multi-pronged approach to checking this. The very first step is obviously to check all the information documentation we have, external opinions from VVBs and the likes, to check the project against the relevant methodologies and that it's followed the right process. And that, I think, is the very basis of any analysis. We do then extend this to our broader, I guess, financing framework. So even if it's not a carbon transaction, any transaction that we look to finance is assessed internally against IFC principles, a host of other kind of international standards that we do abide by. We do have dedicated climate analysts, environmental, social risk teams that don't look at it from a carbon lens, but from a general financing lens. And so that any transaction has to kind of fit both. We do, in the same way that we have a carbon team, we actually have a nature team as well within the bank. So we do also cross a bit with them if it's particularly nature, to get a more, I guess, informed view on the latest biodiversity, nature development in terms of benchmarks that may not be ICVCM, but more nature specific, to see if there's particular red flags. And I guess that combination is going to be the brunt of how we assess a project. We would look at inputs from the likes of B0 or some relevant partners that we feel have the right expertise in the nature space to help inform us, but we don't rely fully on that. So there is a certain amount that comes just through our own processes, and the fact that we do want to treat this as any other form of financing. We do not want a special treatment and framework just for carbon solutions, I guess.
Assessing risk and determining decision making when money's at stake is never a straightforward element. But I'd just ask Oliver to just jump across to you flagged. There isn't a query also for Sebastian, just to go into their approach.
Sure. So yes, Sebastian, a question coming in for B0. So in light of Article 6, but also more generally around how B0 operates, yeah, how does B0 ensure that its ratings methodology to credits are robust and also, I suppose, adaptive enough for evolving your climate science and evolving your rules of the road around Article 6, for example, and other regulatory changes?
Yeah, it's a very good question. And as you can imagine, it's what we spend the bulk of our time trying to tackle. Obviously, the benefit of the carbon market is that it captures such a wide diversity of activity types. And indeed, that's one of the challenges for us as a rating agency that provides a rating, that's fungible across those activity types. We have to stay on top of, a range of different scientific areas and knowledge bases. We're a team of close to 200 people now. About half of those are rating scientists or equivalent in data and other fields that support the ratings process directly. In terms of how we make sure that it's robust and adaptive, I guess the first point I'd make on that is that it has to be transparent. Right, everyone has to be the arbiter of whether ratings are working or not, and so we publish our headline rating. You can get that for free on our website. Indeed, you can get access to parts of our platform to see some of the underlying information on ratings. And so we think that transparency is really important, because everyone should be able to hold ratings to account, but also they should be a language of risk for the market, and everyone should be able to access that language and use it. Likewise, we make all of our methodologies publicly available and all of our processes. If you think about what a rating is actually doing, we pick apart all of the information underlying a project, some of which Audrey highlighted. We kind of standardize that information so we can understand all projects in the same way. We put it into a carbon accounting template, and it tells you how they calculate the number of credits that they issue, what are the underlying calculations and assumptions that feed into that. And we essentially interrogate that. And what do we use to interrogate that? It's our internal team leveraging one of the biggest databases across the carbon markets, of whether that's academic literature, looking at the latest science and what that tells us about carbon stocks in different nature-based projects, or a range of different other areas. And all of this helps us to build a very rich picture on the likelihood that the credits that are subsequently issued by a project are achieving and continue to achieve a ton of carbon. And as I said, that's then an ongoing assessment. That's not just a one-off assessment. And so we're able to also leverage the latest technologies when thinking about gathering data on projects, both on the ground, but also leveraging geospatial techniques, and what that tells us about carbon stocks in and around a project area. And so it's constantly evolving. We've rated 500 projects to date, and as that database gets bigger, obviously the learnings from that database get even greater. So we're constantly reviewing what our ratings in a given sector tell us about the sector, whether that tells us anything about the methodologies and the approaches. So very much a dynamic process, and I guess lots more to come. The next question that we're being asked on this is, at a country level, how can we help to enable market participants to understand country level reporting and the accuracy of the data feeding into NDCs and the different targets. And so we're exploring other tools and products that we can be providing to help people navigate Article 6 and the specific issues that introduces. I hope that's helpful. That's a lot to try and bring into a question.
No, but if anything, just thank you for just trying to unpack those layers. And it really does flag the question when we're talking about, the leverage of technology, ensuring credibility, ensuring certainty and quality. Then we come back to the question of how does that correlate to pricing? Because that's one of the big components that really driving a lot of the open questions on the continent around the value proposition of scaling these markets in a high integrity, high transparency space. So I'd really like to just jump across to Audrey, just to understand your own perspectives on really what role can the financial institutions play in really enforcing or really catalyzing the adoption of these standards to make sure we're seeing a much better, strong correlation between those standards and pricing. Welcome.
Thank you. It's interesting, every time someone asks what should the carbon credit be worth, people tend to turn their head towards the banks, financial institution, and be like, so what should the price be and what are you doing to determine that price? There is a very clear precedent showing that there is conflict of interest in banks or financial institutions stipulating what the price should be and then facilitating financing and trading of those, and that's called the whole LIBOR scandal, right? There are very clear reasons why banks should not be the ones to dictate what the price is. At the end of the day, the view that we have right now is the price is what the buyers say it is. So if we look at it from a financing perspective, the price of a project for us is the agreed offtake price, so long as that price does allow the developer to cover all their operational cost, right? So there's a clear case to be made that you should at least cover your own cost. If not, that project probably shouldn't be existing if no one is ready to pay the right value for it. We do definitely support the idea that it would be a tremendous help if there was some aggregation of pricing, right? I think something like a CORSIA benchmark, if it does, when it does, I want to be positive, when it does materialize, would be very helpful in saying, all right, this is the group of activities that are eligible under CORSIA. This is roughly the average price that they should be at, right? And we do fully accept that some will be slightly above, some will be a bit below, but on an average basis, that price should be more or less the CORSIA price, and that will then help a lot in determining which projects are right now, what we say, in the money, should they see the light of day because they have the right opportunity cost, and which ones maybe need to wait until the prices goes higher until the activity itself is worth developing, right? So I'm fully aware this does not give you a full answer. We are very much supportive of any type of framework. Again, I'm coming back to those signals, but these signals that do help to aggregate a bit, whether it's at sectoral level, a cook stove level, or a CORSIA level, and get a better idea of pricing that helps to compare projects to one another. We would like to see similar technology be priced at similar points more globally, but it is not something for us to set. Unfortunately, it is more something for us to, I guess, influence, not in terms of influencing the price, but in terms of saying we need a price. And we do welcome, we do support any initiatives, any scheme that helps determining a price. But yeah, at this stage, it is more wish than something that we do drive, I'm afraid.
Thank you so much for that truth and just very direct frankness on these realities, Audrey. Definitely, Sebastian will be coming in on this, but I'd like to just let Paramount just fill in one of the open questions, then come back to you, Sebastian, please. Oliver, please just
Sure.
guide Paramount that
sure.
question.
Well, before we go back to Sebastian, then, one question for you, Paramount, as we look to sort of close off the last 5 minutes or so. The cost of verification is historically, a very expensive item in the whole sort of project cycle. How is sort of Article 6, or is it indeed addressing this point?
Thanks. The cost of verification, like I think, if I go back, I think there are two. Historically, if you see that how the DOEs actually cost their verification spread of cost, like 80% of them, I would apply the Pareto's law, like 80% of the validation and the verification requirements constitutes 20% of the time. So that's the 20% of the value for the validation and verification. And 20% of what they do as validation and verification constitutes 80% value for the service delivery. And that is primarily the baseline establishment and additionality demonstration. And I think those are the two critical pillars of how the more and more that complicated the things become, it's the cost of the validation and verification increases. So one of the things that the Article 6.4 is looking at is in terms of reducing the necessity for paper trail, so that you have digital systems which could help in improving and reducing the time required for the DOEs. Second, most of the standards that are being developed, rather than looking at, from the experience, if you remember in the CDMs world, we had 250 standards addressing different mitigation activity types across 16 sectors and 32 technical areas. So what we are trying also to do is to have standards that are developed at the highest possible aggregated level, so that the cost of smaller activities that could follow within that, the cost is reduced. The third, as part of the capacity building program, and I think that's something that ACME is also involved with, is to make available, like even when the CDM was at its peak in the KP1, we had about 50 validators and verifiers for activities implemented across 117 countries for the CDM. And we know that in Article 6.4, the number of countries that will participate, both from the developed and the developing, is going to increase. So as part of the capacity building, we are also trying to make sure that the necessary auditors and the validators and verifiers are available locally, so that could also significantly reduce the cost. So one, in terms of the time and effort spent by the DOEs in applying the regulations, is one area that we are looking at. Second, reducing the dependency on paper trail and the secondary and the tertiary way of undertaking assessment through digital systems. And three, making sure that the necessary resources to undertake validation and verification functions are available locally through our capacity building program, and also talking to various national accreditation bodies.
Thank you so much, Paramount, for just working to try and give us a bit of context and scoping on the working pieces. I think first and foremost, I really want to just apologize to the audience. It seems to have been a bit of wishful thinking to try and squeeze this much deep and quality content into only an hour. So we understand that a number of questions have not been able to be addressed. And we will have to move to closing out the session to respect everyone's time. But we do ask you to just put any questions you have into the Q&A platform, and we'll work with our internal teams at ACMI as well as with the panelists to try and give you substantial responses to those and share them with you hereafter. But I'd like to just, as we go to closing, just allow Sebastian to come in briefly on the point around that open question around pricing, and then we'll do a quick round of closing remarks from the panelists. Sebastian, please.
It was just a very quick point on pricing, I guess, to get everyone excited on this call about the role that ratings can play. Because if you look at what's happened in the voluntary carbon market in a very short period of time, we've gone from no correlation between ratings and pricing when they were first introduced to the market to now seeing a positive correlation. Why should that get everyone excited? Well, ratings are the mechanism that enable people, and particularly project developers, to be rewarded for going above and beyond just what a methodology dictates, and for maintaining and managing their projects in a robust way. And so it is a way to create a race to the top and enable people to understand and manage risk. And we're very excited, hopefully, to have the same impact in the Article 6 market. The reason that we're pushing for price to hopefully always be a data point that's available. And it's also why we're making our platform freely available to supply side governments, because we want them to be able to leverage our database of ratings to help enable and capacity build within the country to see high integrity supply coming to the market. So just a very quick point that I wanted to make before we close out.
Thanks so much for that, Sebastian. I just turn to the panelists, just starting with Audrey, just asking you to give your final views and closing statements in the last 30 seconds each. It would be great to hear how you see the VCM, the Article 6 and compliance markets complementing one another rather than conflicting, and just any closing views. Welcome, Audrey.
Thank you for that challenge, 30 seconds. I mean, I think it is clear overall that we are running behind when it comes to decarbonization, whether at country or company level. And just the public or just the private sector on their own cannot do enough to address it all, right? And so for that reason, I do feel that we need both Article 6 and voluntary and and not just both, and compliance markets. They are not competing against each other. I can see how, from a developer perspective, choosing which way to go down might be challenging, but they're not competing. They are meant to be complementary. Objectively, looking at where the market is right now and the lack of confidence from buyers' demand for voluntary markets, I do feel like in the nearer term, we're going to see more developing on the Article 6 and compliance side of things. Compliance being, in some cases, leveraging carbon activities, right? I would fully consider Corsia as a compliance market. It leverages the same projects. Singapore is another example, and there are many more. Well, I do think it will take a bit longer for the voluntary side to really take off, because it does still require a bit more clarity from a regulatory perspective on what type of claims can be made by using it. How does it interact with the purchases done at country level under Article 6 level? And until that is fully clarified, I think we will still have a limited number of companies that are sophisticated enough to navigate this. But I do see both markets fully complementing each other in the 5 to 10 year horizon.
Audrey, thank you so much for trying to do the impossible so effectively and so clearly. Parimal, just handing over to you. Please, just 30 seconds closing statements, and then we'll go to Sebastian. Thank you, Parimal.
Yeah, I would simply say that like both compliance and voluntary markets are two eyes of a human body, and I don't see that there's a big difference between which eye has to see better than the other. Times that we need to use goggles to make sure that when there's something, the power or the vision goes down, that you need to calibrate it to make sure that you have an equivalent view. So from a quality perspective, I see that there's no difference between voluntary and compliance. The quality should remain the same. Oftentimes that there's a belief that when it is voluntary that you can have some compromise in the quality, but there are various efforts that exist in the market today are making that course correction. Second, they are going to be complementary in nature, because oftentimes that I've been pushed to the wall from UNFCCC saying that the Article 6 is the compliance people. Do not necessarily, because as I said, that Article 6 also serves for the voluntary purpose. And I see that there is going to be a potential role reversal between the different standards that exist. I have a feeling that Article 6.4 possibly might be used more in the voluntary space going forward as mitigation contribution unit supplier, and countries using probably independent standards and partially Article 6.4 as standards for their compliance purposes. Third, the emergence of a lot of domestic compliance markets with an anticipation of the wishful thinkers of moving from the carbon pricing coverage from 27% of emissions that exist today to 50% by 2030. I see that the need for both the compliance and the voluntary market, both in international scale and domestic scale, is the need of the hour to meet towards our targets.
Thank you, Parimal. Over to you, Sebastian, to just give us some final words of clarity, vision, and wisdom from the rating side.
I think my other fellow panelists have done a fantastic job so far. So I will just bring that together in saying that I'm very excited for the role that market mechanisms can play in helping us achieve net zero. We know that we can do it in a much more cost-effective and a quicker way if we truly enable them. And Article 6 is getting there. And from our perspective, the rating agency, we're very, very excited about the role that we can play in that. As has been alluded to, at the end of the day, we're just trying to finance interventions and activities that help us decarbonize. And we want to be a tool that helps people understand them and have the confidence to transact in them. And we're particularly excited, about the supply potential in Africa, and some of the work that's being done to enable countries to deliver to this market. So onwards and upwards.
Thank you so much. Those are the dream closing words for us, onwards and upwards. Just once again, deep thanks to our panelists for just coming to share such deep knowledge and clarity on these very complex issues. I think as ACMI, we're very conscious this is about sensitizing and building awareness around these realities. And we're very grateful to partners who are willing to come to stand with us to build this deeper cross-section knowledge about the realities that people need to be much more aware of. But I think we thank our audience particularly for giving us extra time. Sorry for stealing an extra 6 or 7 minutes of your lives. And just once again, deep gratitude to you all for joining us, for sharing your questions. And we will do our work to try and put together concrete and substantial answers to those that we're not able to address during the session and come back to you all. So once again, thank you all very, very much for your time and look forward to the next one. Have a great one.